And what to expect from the local market open. We're joined by Stan Shamu from IG in Melbourne. Now, Stan, good to see you there. The Aussie greenback pair still holding above that 90 US cent mark. What's the best way to play the Aussie at the moment?
Yeah, it's quite an interesting pair of course, for the whole world at the moment, particularly after that sharp drop we saw yesterday. Of course, Glenn Stevens stirred the pot a little bit further and really did sound a very dovish tone for the Aussie dollar. Now, it looks like the Aussie versus the greenback hasn't actually dropped by as much as it seems like, because it's really been in the same range over the past month. I think that range between that 90 cents and about 93.20 has really continued to hold, and that's where the Aussie dollar has been over the past month. As a result, we're actually seeing a lot more traders look at the crosses for opportunities for shorting the Aussie dollar. Of course, we've had fresh lows for the likes of the Aussie versus the yen, the Aussie versus the New Zealand dollar, the Aussie versus the euro as well. So it certainly looks like it's not just the greenback that we need to look at when we trade the Aussie dollar. It has to be the crosses as well. If you take the Aussie yen, for example, it was trading around 105 back in April. And it's dropped to around 88.50 at the moment, and it certainly looks like it might be headed towards 84 in the short term. Now, that's a pretty sharp drop, and of course, with the balance of factors for the Aussie dollar continuing to look quite weak, it does look like there's further opportunities in the trading pair. Of course, we've got 18 out of 28 economists polled at the moment calling for a rate cut next week, whilst the swaps market's pricing in about a 95% chance of a 25 basis point rate cut next week. So it looks like it's almost a dead set at the moment. But of course, the market always surprises every now and again, so we might see a little bit of caution. But particularly with the Aussie versus the other crosses, I think there is certainly potential for further downside in the short term.
Looking at the US dollar, big week as we know. In for some event risk, do you think, this week, or is it all baked in?
Yeah, there certainly is a lot of event risk coming up starting tonight. Of course, we've got the ADP non-farm employment change, which is expected to be a little bit lower than the previous month at 179,000. And of course, we've got the GDP number expected up about 1.1%, along with the Chicago PMI and of course the FOMC statement later on in the session. So there's definitely quite a lot going on for the US dollar at the moment. Of course, a lot of analysts feel that we won't hear much anything new from the Fed, apart from the fact that they will continue to assess data in the short term and of course look at different metrics to see if the economy is ticking along well enough for them to start tapering in September. But any hints towards the fact that we won't get tapering in September will certainly cause a little bit of volatility for the greenback. Now, with the ADP number, that will definitely be a good lead into the non-farm payrolls and unemployment change data for Friday. And that's what most analysts have tipped to be, of course, the main source of volatility, considering the Fed might not surprise at all. So I think what we get from the ADP number today will certainly set the tone. And considering it's expected to come in slightly lower than the previous month, then there is always potential for an upward surprise there. And should this be the case, then we could see the greenback recover in the short term, and this would be a pretty sharp reversal, which would probably be one of the main reasons why pairs like the Aussie dollar and other US dollar major pairs as well are slightly consolidating at the moment. Just that slight uncertainty from that US dollar side of things.
Stan, what's your opening call for the ASX 200 today then?
We're looking at a slightly higher open, up about 0.2% to 5,058. So it certainly looks like that expectation of a rate cut will help underpin a lot of stocks in the market today, particularly from the yield plays. I think the banks will be supported along with some of the other high-yielding stocks. That's obviously one of the main beneficiaries of a rate cut for the market, along with the retailers and other consumer stocks. Of course, we also have the exchange rate sensitive stocks likely to benefit from the fact that the Aussie looks like it's going to trade to the downside, leading into the interest rate decision next week. So that should be quite interesting as well. But I think the balance of factors for the resource names at the moment seems to be a bit negative. The US dollar had a bit of strength overnight, which weighed on a lot of the base metals. Gold was slightly higher, mostly flat really, so that shouldn't be too supportive of the gold names. So we probably will see a situation where it'll be the banks pushing a bit higher whilst the miners struggle a little bit, and that should see us a little bit flat heading into the business end of the week.
All right, Stan, thanks so much for that.
Cheers, buddy.
Stan Shamu there from IG. All right, let's just remind you of those figures from Wall Street there. Flat finish for the S&P 500 and the Dow, the Nasdaq gaining 0.5%. In terms of economic data, we had consumer confidence slipping below forecasts, house prices rising in line with expectations. Some